the government on 28 July took a big decision for bank account holders. The Union Cabinet has approved the Deposit Insurance and Credit Guarantee Corporation Amendment Bill 2021. The bill provides account holders security of their money by allowing access up to Rs 5 lakh within 90 days of a bank coming under a moratorium. It was introduced in Parliament's monsoon session held under the chairmanship of Prime Minister Modi. Union Minister Anurag Thakur said that Deposit Insurance Credit Guarantee Corporation was formed because bank depositors faced problems while withdrawing their money from banks if RBI imposed a moratorium. Last year, the Finance Minister had increased its limit from 1 lakh to 5 lakh, and on 28 July, it had been decided that within 90 days, up to Rs 5 lakh will be paid to the depositors. Let's first understand what is Deposit Insurance Credit Guarantee Corporation or DICGC. DICGC is a wholly owned subsidiary of Reserve Bank of India. It provides deposit insurance that works as a protection cover for bank deposit holders when the bank fails to pay its depositors. How does DICGC work? Well, it protects depositors' money kept in all commercial and foreign banks located in India. Central, state and urban cooperative banks, regional rural banks and local banks, provided that the banks have opted for DICGC cover. The agency's operations are performed as per the Deposit Insurance and Credit Guarantee Corporation Act 1961 and the Deposit Insurance and Credit Guarantee Corporation General Regulations 1961. Under the latest amendment in the DICGC bill, 98.3% of all deposits will be covered, and in the terms of deposit value, 50.9% of deposit will be covered. While the global deposit value is only 80% of all deposit accounts and covers only 20 to 30% of the deposit value. Here's what Finance Minister Nirmala Sitharaman said on this.
98.3% of all deposit accounts. Because of this 5 lakh increase, 98.3% of all deposit accounts will get covered. And in terms of deposit value, 50.9% deposits value will be covered. Now, if this is what we have in India now after this cabinet clearance, just compare what prevails outside globally. Deposit insurance coverage is only 80% of all deposit accounts globally. And it covers only to 20 to 30% deposit value. So what we have done today in India because of cabinet approval means that 98.3% as opposed to 80% globally. In India it's 98.3%. And as regards account value, we will be covering 50.9% value, while globally it is only 20 to 30% value.
Apart from this, the Cabinet has also approved the Limited Liability Partnership Amendment Bill 2021. The bill will remove the troubles caused by the small mistakes in the business so that honest businessmen do not face the unnecessary trouble. LLPs with contributions of less than or equal to Rs 25 lakh and LLPs with turnover less than Rs 40 lakh are considered as small LLPs. Now, the range will be from Rs 25 lakh to Rs 5 crore, while the size of the business will be considered to Rs 50 crore. Commenting on the expanding of the scope of small LLPs, Finance Minister Nirmala Sitharaman said,
somewhere between the large companies which are very well regulated and partnerships or small proprietorship, LLPs in between did not have the benefit of many of the things which were happening either under simplified regulation or under the ease of practice, whether it is under the proprietorship. So we are bridging this gap and making LLPs far more attractive and easy to handle, so that many of the startups today which prefer the LLP model can also feel equally given ease of business opportunities.
The amendments of LLP Bill 2021 will provide ease of doing business for the startups that prefer the LLP model. Thank you for watching. Stay tuned for more such updates on developing stories from all across India.